Welcome everyone. Welcome to another podcast. My name is Seewing from the Real Estate Network, and my co-host is Miss Maureen McCann from Spartan Invest. And welcome, Maureen. How are you?
Oh, Seewing, it's always a pleasure to see you and spend some time with you.
Absolutely, likewise here. So thank you for taking time out of your day to discuss real estate investing. Now, we're going to spend a very short 7 minute, okay, hopefully 7 minute. Let's look at the
Fingers crossed.
level. Okay, you and I have been doing a lot of coaching and consulting with our respective business, of course, and we help real estate investors to achieve their financial goals over time. So here's the investors need to know, right? So when investors are thinking or seriously thinking about getting into a rental real estate, so the question you have to ask yourself is, we have to ask when we consult with our investor. Here's the thing we ask. So you have, first of all, Mr. Client, you have three choices. Choice number one is to do nothing. Continue with the way you've been doing finances, or, for the longest time, whatever. By doing nothing, your financial situation is not going to improve. So that is not a good situation to be in, right? And your second option is do something. What does that mean? Do something on your own, right? I know everybody's very, very busy. A lot of people have full-time job. They have a family to take care of, children, very, very busy lives. And you want to venture into real estate investing, especially out-of-state investing. If you live in California or one of the high-cost areas in the country, and you try to buy affordable rental properties that can cash flow. If you do it yourself, if you are the Lone Ranger, if you will, yeah, you need Tonto. I mean, whatever. If you're Batman, you need Robin, right?
You need a partner in crime. You do.
You do need a partner in crime. So basically, if you do it yourself, you know how overwhelming that is. Do your own research, do your own due diligence out there to find a market, to find a market to buy. How you can do it? You can manage your own property 1,000 miles away. You can self-manage your rental properties, or you can the risk of buying the wrong property, or working with an organization that's going to scam you, perhaps, or dishonest, right? So doing it yourself is very high risk, and so I wouldn't recommend that, especially busy people like most of us out there. And the third option is to find a reputable turnkey provider that have done most of the work for you, most of the research and due diligence, that have a team in place in a specific market where you can tap into the resources because they have done 95% of the due diligence. They have the property management in place. They have the whole 9 yards. And, it's just that way, as a real estate investor, when you work with a trustworthy turnkey provider in a specific market, that allow you to scale your real estate portfolio, that allow you to buy more properties over time, so you can achieve your financial dreams, right? And secondly, the second thing is, let's assume you found a turnkey provider that can help you, right? Given the current situation, what if you want to do a down payment, if you want to achieve cash flow on a rental property? So you have three options, right? You can go through the conventional investor loans, 30-year amortized loans, which with 25% down payment. I know the interest rate is higher now than before for investment loans, anywhere from 5.5% to 6% interest rate, what have you. If you want to achieve a break even or slight positive cash flow, or you can put down 20% down payment, right? Preserve some of your down payment, but your cash flow may not be that high. Or you can put down 35% down payment on a loan, so you can get more initial cash flow. So those are three loan up, or you can what's that word?
Buy down the points.
Yeah, buy down the points, or you can buy down the points on the loan, so you have a lower interest rate. So you have to compare the cost of buying down the loan versus the lower the cash flow. And then finally, anything else we need to talk about before you will share your thoughts?
Yeah, no, I think you did. I think I like how you break it down. It's like the three things that you either do nothing and then you get nothing. You do something on your own, which, the learning curve and the time that it takes you to get what the end result just takes a lot of time, or leverage with a group or company that is exactly what they do, right? I don't go to a mechanic to get my tooth fixed, right? So I go to, if you're looking to invest in real estate, you go to a company that has dedicated their time. They've got systems and processes and people committed to delivering a result. And that's three options that investors have: do nothing, do something on their own, or leverage other people's time and experience to get the end result that they want. And then speaking in terms of the options that investors have to acquire properties and the lending terms, you can do, the conventional 30-year, you can do an interest only. I know Aaron Chapman, if he was listening to this, he would probably strangle me because, he's a big 30% 20% down on a 30-year fixed note. And then, there's also asset-based lending, which is another option. And then the fourth one is, find companies that really want to earn your business and want to ease some of the cost of the borrowing cost, and they're willing to pay down the points. So it helps you get into that property. And something that you said, and something that we talked about a little bit before was, if you're really going for that cash flow, it's a 6% interest rate for an investor loan. It's still very cheap. It's cheap money. It's just, we're not used to it because we were so used to 3 and 4% not too long ago, but we're at 6% right now. So what do? You just get more creative on the financing. And if your goal is a higher monthly cash flow, and you've got the capital to put the extra money down in equity in your own house, in your own rental property, and you boost your cash flow, say from $100 to a couple $100 per month, and that's the way to go. Good option.
Yep. So to recap, Maureen, in that a real estate investor, they have to look at the big picture. They need to understand their own financial plan, a hopefully written plan, and just work the financial plan, hire a good coach advisor as part of our turnkey team, and then most important of all, take action. So that is my takeaway from this short presentation. And what is your final takeaway recap?
If you do nothing, you get nothing. If you do something and you take a risk, there is a reward to that. And so you and I, as real estate investment coaches, that have been doing this now, I think, 20 years for you, 13 years for me. So what is that? 33 years of experience here, coming at you in this short little 7-minute video, just encouraging you to look at the options that you have, and align yourself with a good team, a good coach who can actually help you get to your financial goal. Work with your financial advisor, work with your real estate investment coach. These are individuals who understand the long-term benefits of building a real estate portfolio for the long-term wealth of your family. So that would be my summary. And I always appreciate you with these spur of the moment ideas that come to your mind, because you're really just focusing on getting the right messaging to the listener, to the investor, to encourage them to get up and do something different.
Yep, exactly. With that in mind, thank you so much, everyone. My name is Seewing Yi from the Yi Real Estate Network.com. If you want to enter my website, and Maureen McCann is SpartanInvest.com, and her email address is McCann at SpartanInvest.com. Very simply, of course, your information will be on the body of our video for anyone who wants to contact you. So thank you so much, everyone, for attending. Have a nice day.
Bye.
Bye-bye.